I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump says he would welcome another government shutdown if Democrats don't play ball on immigration.
If we don't change the legislation, if we don't get rid of these loopholes where killers are allowed to come into our country and continue to kill gang members, and we're just talking about MS-13, there are many gang members that we don't even mention. If we don't change it, let's have a shutdown. We'll do a shutdown, and it's worth it for our country. I'd love to see a shutdown if we don't get this stuff taken care of.
White House Chief of Staff John Kelly says the president will be briefed today on the Democratic rebuttal of the GOP memo alleging bias at the FBI and DOJ. Trump has the document but reportedly hasn't read it. He has until Friday to block the release. And the president plans to unveil his infrastructure proposal next Monday. Trump hopes to generate $1.5 trillion in spending on roads, bridges, and airports, as well as other public works. Only $200 billion would come from the federal government. And the Pentagon says the war in Afghanistan is costing U.S. taxpayers $45 billion a year. Lawmakers grilled the Trump administration today. Global news 24 hours a day, powered by 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
I'm Emily Chang, and this is Bloomberg Technology. Coming up, Snap pops in after-hours trading, soaring as much as 30% after smashing estimates in the fourth quarter. We will break down the company's first earnings victory since it went public. Plus, Max Levchin's take on the gender dynamic in Silicon Valley, my exclusive conversation with the PayPal co-founder, and the moves he is making to get workplace culture right at a firm. And Travis Kalanick takes the stand, highlights from day 2 of the courtroom showdown between Uber and Waymo, including the testimony from the former Uber CEO. But first, to our lead. Snap jumping in after hours after a blow-away fourth quarter earnings report with revenue that topped analyst estimates for the first time since the company went public almost a year ago. The earnings were buoyed by momentum in its advertising business and user growth. Snap said fourth quarter sales jumped 72% to $285 million, and its daily active users jumped to 187 million, up 18% from a year ago. Joining us from Seattle, eMarketer analyst Deborah Aho-Williamson, and in San Francisco, Bloomberg Tech Sarah Fire, who covers Snap for us. So, Sarah, what did Snap get right this quarter?
Well, they have been transitioning their advertising business to make it more automatic, more programmatic, selling ads basically automatically, which means they can have a bigger base of advertisers. The price of ads has actually gone down, but the volume and the amount of times people look at these ads is going up. So Snap has been able to really make this work for them in this quarter for the first time.
Deborah, what's jumping out to you? We know they've been doing a lot. There's a whole redesign, and perhaps we're seeing some of the results of that. But what do you think is really driving these results?
I think it is a couple of factors. I think that, first of all, Snapchat really needed this quarter, and because of the previous quarters not so good for them. So this was a super positive sign for the company. I really feel that users are still heavily engaged with Snapchat. That's proven out by the increase in user growth rate this quarter. And I think that advertisers, while some of them have been skeptical, they still see Snapchat as being a place where they can be super experimental, where they can try new things, and where they can really start to engage with that super important youth and teen audience.
I'm looking at the after hours chart here on my Bloomberg, still up 20%. The big question, Sarah, is can they sustain this over several quarters, not just one?
I think that's still a huge question because this company hasn't proven that it really has a lot of visibility into the future of its business. All the prior quarters included big surprises, nothing to show us that future quarters won't as well. They still have a long road ahead of them, and they're competing in this market that is dominated by Facebook and Google. Yes, those big players have advertisers wanting some alternative for their money, Snap is marketing itself as that alternative, much cheaper ads. But still, it's very competitive, and Instagram is just growing far past what Snap has in terms of spread for Snap's products that Snap has actually invented and been copied by Facebook.
Instagram and Facebook both accused of, basically lifting some of Snap's product ideas and executing them perhaps sometimes even better. Deborah, what do you think the real challenges are for Snap going forward in terms of what you're going to be watching?
Yeah. Well, first of all, to put a few numbers on what Sarah just said, we're forecasting that Instagram will have $8 billion in worldwide ad revenue this year, compared to about $1.5 billion for Snapchat. So you can see there's quite a lot of gap in between the two companies in terms of advertising revenue worldwide. However, Snapchat is growing at roughly the same rate, about 90% growth this year compared to about a similar amount for Instagram. So just to put those numbers on it. But to get back to your question, I think that the competition with Instagram and Facebook obviously is still something we're watching very, very closely. We're also watching because Snapchat up until now has been very aggressive with new products and new innovations. And we're starting to see things like Maps maybe not perform as well as maybe the company had hoped. We saw Spectacles perhaps also not perform as well as the company had hoped. So the question is, can Snapchat actually continue to be aggressively innovative and successful at those innovations and stay a step ahead of its competition?
And what about the leadership turnover at the company? Is that a concern to you?
To me, not so much. Obviously, you always want to have strong leaders at the company. We focus on looking at two factors at eMarketer. We look at growth in ad revenue or changes in ad revenue. We look at user changes. Both of those were positive this quarter. So I don't think that the changes in the management of the company are something that is impacting either of those factors at this point.
And Sarah, Evan Spiegel has made it clear that he knows that people who work at the company want to hear from him more. Do you think we'll start seeing more of him out there?
I think that there's a lot of confusion at the company right now because this redesign that you mentioned earlier, it was supposed to be done by the end of the year, and now we're seeing that it won't be fully rolled out until the end of the first quarter. So there are clearly some things that are still missing deadlines. There's been that management departure that you mentioned. I think that the company still has a lot to work out in terms of how it grows. There have also been a few rounds of layoffs recently at the company.
All right, Sarah Fryer, I know you will keep us apprised. And Deborah Aho-Williamson, as always, great to have you here on the show from eMarketer. Now, to the broader market and the U.S. market's whiplash with the Dow turning in its best performance in 2 years, and tech shares helping to lead the comeback. This after a two-day pummeling that spread to global equity markets. Volatility back in the forefront as stocks saw wild swings on the day. Here to bring us all the highlights, our Bloomberg News stocks reporter, Abigail Doolittle. Quite an exciting few days for you.
It was really amazing. You're right about that. The last few days, we've had a lot to report on. Today, really wild. On the open, we had the major averages down more than 2%, then whipsawing between these gains and losses on the day. And then this big rebound rally at the end of the day, investors snapping up a lot of the high-quality names, including Apple, Amazon, Micron, and NVIDIA. That fear of missing out, the FOMO, buy the dip. The question is whether or not we'll see the buying power last, because the technicals are a little bit shaky for the major averages. Plus, if we take a look at the major averages from the recent peaks, they're still down about 5%. So from that standpoint, the sellers are in control. The last few days until today, the sellers have been in control, but a little bit of relief for the buyers today on the day, right at the end of the day.
Is the volatility going to last?
Well, it just may. If we hop into the Bloomberg and take a look at this chart of the NASDAQ since the recent peak. So first of all, let's walk through today. This is today, and you can see all of these whipsaws. So this is the morning on the open, a lower low, suggesting that maybe the sellers were really going to pummel us once again. But then we have this recovery, these whipsaws, now at the highs. The question is whether or not this is a bottom. Is this one of the quote-unquote V bottoms? Looking at it, I would say probably not. There's probably a little bit more selling pressure when we also take some of the other technicals into account. But we'll see. You know, who knows? Maybe the buyers will get gritty, and that FOMO, fear of missing out on the big tech names, and the rally. In fact, somebody that I was talking to today buying Amazon because they think that perhaps this is going to be the low. Time will tell. I think that on the week right now, we're already looking at losses still. The week is young, so let's see what Wednesday, Thursday, and Friday bring.
Bitcoin ending the day slightly low. This after a big, hitting a big low over the last week.
Yeah, Bitcoin, wow, what a story on the year in the cryptocurrency. Speak of volatility. And, some say that there's not a lot of fundamental evidence here to point to. You can talk about regulations, you can talk about credit cards and banks not wanting to use the cryptocurrencies. But this is a great place to use the technicals. It's pure supply and demand. And if we hop into the Bloomberg, so Emily, I showed you this chart just a couple of weeks ago, I think when Bitcoin was probably closer to 13 or 14,000 per Bitcoin, talking about the idea that it could go to 1,000. These are the technicals. Last year, the big uptrend, buyers in control. Then we have this range between the buyers and the sellers duking it out, if you will, really battling. And then the sellers took control. It suggests this entire range could drop to the downside. An equal and measured move, as hard it is to see here, is toward $1,000. So that is still a possibility, suggesting wild volatility, uncertainty. Stay tuned.
It's going to be a ride. Abigail Doolittle, you're going to keep us posted on every twist and turn. Thank you very much. All right, Disney also posted first quarter results. Teeming crowds at Disney theme parks, including its new Avatar theme park, helped the world's largest entertainment company beat on the top line. Profit at the company's TV business remains in retreat, and the film studio big comeback awaits a bigger slate of films, including Black Panther this month. Revenue totaled more than $15 billion in the period, but missed Wall Street forecasts. Coming up, PayPal co-founder Max Levchin sits down with us to discuss how his opinions about diversity and meritocracy in Silicon Valley have evolved. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Apple is pulling back on buying corporate bonds with its overseas cash as it prepares to bring the money home to the U.S. This is according to people familiar with the matter. About $157 billion worth of Apple's $285 billion in cash is invested in corporate debt, making it a leading lender. Investors in investment-grade corporate bonds have been bracing for a market with fewer buyers since the new U.S. tax law was enacted late last year. Well, as one of the co-founders of PayPal, Max Levchin rose to be one of the most powerful men in technology, taking a center seat in Silicon Valley. And in that position, his opinion around diversity and hiring has greatly evolved. I covered Levchin's story in my book, Brotopia, Breaking Up the Boys Club of Silicon Valley, which hits stores today. I caught up with Max Levchin and discussed how things operated at PayPal and beyond.
I would describe my efforts at the time, with the benefit of hindsight, as just generally unaware. I was not particularly concerned with the gender balance or really any kind of balance. I was trying to hire good people as quickly as I could, and the one great source of excellent coders I knew was my alma mater, from where I came less than 2 years prior. And so I was actively vacuuming up the best and brightest that I spent time with in school, which all happened to be men. There were men of lots of diverse ethnic origin, but there were very, very few women, even in my class, which is actually quite large. And the few that I did know all seemed to have switched major from computer science to something else before we graduated.
What you probably didn't realize at the time is that you were becoming part of one of the most powerful networks in Silicon Valley history, which has come to be known as the PayPal Mafia, a group of very influential people who all happen to be men. What's your sort of takeaway from that?
It's not unique in the sense that every successful startup, especially one that selects for drive and grit and entrepreneurialism in its early employee base, tends to generate kind of a wave of entrepreneurs that feed off the capital, the network, the cachet that you establish in company prior, you go forward. So I have nothing but great value to have derived from the network that we had established. Obviously, it would be even better if it had good representation of the other gender in it.
Do you think the idea of meritocracy is problematic in Silicon Valley? Because, one of the things that people who worked at PayPal told me was this belief that it was a meritocracy and they were hiring based on merit, when in fact you were hiring a lot of people that you knew.
So I think meritocracy in a vacuum is not a bad idea. I think being able to honestly say the people that are here have earned their spot is very powerful. It's a great motivator to say you are the best of the best. The downside of meritocracy, if that's the only criterion you choose, you select for people you know, because if you don't know how to reach out into other groups, other communities, other flavors of engineers, for lack of a better term, you're going to select from a fairly shallow pool. We ran out of candidates because I ran out of male friends at U of I, and there was really not anyone else to recruit.
One of the most interesting parts of your story to me is what happened at Slide, where you admit that there were some bros and there was a sort of bro-y culture that developed and you took action. What happened there?
The thing about Slide is actually, I think what triggered my attention to all these things was really Slide, where I started out with basically a neutral point of view. The culture will shape itself, we'll get some really bright people in, and while at PayPal I was too young and we were going too quickly and I just didn't really have enough of a worldview to understand what was being shaped, at Slide I had seen enough of these companies and I started to realize that what was forming itself without any guidance was actually not what I liked, not what I wanted to do. The sort of a hard drinking and some of the, on a bad day I might call it sexist behaviors was really not at all what I was comfortable with. And when I sort of tried to gently steer it, it wasn't going away on its own. And that when I sort of realized, if I don't take matters very seriously and start pushing out and sort of drawing some very bright lines about what's okay, what's not okay, what's expected, it wouldn't cure itself.
So what did you do?
Some very tough conversations had to be had. A couple of people got fired. I had made a few attempts to ban some of the happier of the happy hours. Not all of it worked. It was, it's definitely, the lesson learned from Slide was actually kind of a sad one. There were a lot of amazing people there, people that I would work with again and again, and I am fortunately working with some of them again, so I'm very happy to report I didn't blow up those relationships completely. But just a small amount of bad behavior created such a negative patina to the whole thing. It was very, very hard to invert some of the choices that I didn't even make. I just sort of let them happen.
Now at a firm, you've taken a different approach and you are much more focused on hiring and promoting women. Mm-hmm. What are you doing differently at a firm that you didn't do at PayPal or Slide?
So the most important thing that we did at a firm is we took culture as a sort of first-class citizen. There was never a moment when we didn't ask ourselves, what is this decision, what is this process, what is this framing do to our culture, how do we think of our culture? Affirm is the first company, this might sound embarrassing, but it's the first company where I wrote down our core values before we made our first hire. All the companies that I founded in the past, the culture merged, and sometimes it was better, sometimes it was not. With Affirm, I came into the founding with a view that I have to form the culture, I have to control for what I want this company to be when it grows up. Even if we had no employees, I want to know that it's the kind of place that I'm proud of as opposed to the one I'm trying to fix. How
do we get more people, and mostly men, to understand this problem and do something about it? What do you think needs to be done? What do CEOs and investors need to do?
So I think it's there's a bunch of things, and I don't know if I have an exhaustive list. I think just being aware of the fact that it's a talent war, and the way you win it isn't just by saying, well, I'm going to go back to the same old well and get the same people out. The way to win it, at least what's worked for us, is you widen the net you cast, and that naturally leads to embracing of diversity and inclusion because you find diverse candidates in diverse places.
My conversation there with Max Levchin, co-founder of PayPal, now CEO of Affirm. Still ahead, Elon Musk hits a major milestone as SpaceX launches the world's most powerful rocket. That story is ahead. And if you have a Bloomberg terminal, check out TV Go, watch us online, click on your charts and graphics, and interact with us directly over the IB. Just click TV Go on your terminal. You can also contact us on Twitter. I'm at Emily Chang TV, and check it out at TikTok by Bloomberg, the first 24-hour global news network streaming live on Twitter. This is Bloomberg. SpaceX has officially launched the world's most powerful rocket. The Falcon Heavy lifted off from Florida's Kennedy Space Center to embark on its first test flight. It was carrying a red Tesla Roadster on an endless road trip past Mars. Following the launch, SpaceX did something never before seen in space history. It re-landed multiple rocket cores back to Earth. 2 of the 3 15-story boosters used in the launch came back and landed upright at Cape Canaveral. The boosters landed at the same time, side by side. This is a major milestone in the company's quest to grow its customer base and fund its vision of making life multiplanetary. Slack has officially named its first CFO. In a blog post early Tuesday, Slack CEO Stuart Butterfield announced longtime employee Alan Shim would be named the company's chief financial officer. Just last year, the company brought Sarah Fryer on board as their first independent board member. These changes could be a sign of Slack pointing towards an IPO. And some context to last week's shakeup at Airbnb. At the company's annual planning meetings in San Francisco, co-founder and CEO Brian Chesky privately told his then CFO, Lawrence Tosi, that Airbnb was putting off its initial public offering. Tosi had reportedly been lining up investors and was eyeing a jump to chief operating officer. Tosi protested the IPO delay and the decision to promote Belinda Johnson to COO above him. By the end of the meeting with Chesky, Tosi was out of a job. And Google is making a big investment in the New York real estate market. Google agreed to pay more than $2 billion for Chelsea Market, which sits directly across the street from the tech giant's New York headquarters. The seller of the 1.2 million square foot property is Jamestown LP, an Atlanta-based real estate investment firm. Coming up, more reaction to Snap's blockbuster earnings results, topping analyst estimates for the first time since the company went public almost a year ago. We will dig into the numbers. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Senate Democratic leader Chuck Schumer is dismissing President Trump's comments about allowing a shutdown if the Democrats don't compromise on immigration.
Speaks for itself. We had one Trump shutdown. Nobody wants another, maybe except him.
Republicans and Democrats are currently negotiating to keep the government open after the deadline on Thursday. And meantime, Senate leaders are said to be near a budget deal that would lift caps on defense and domestic spending. Negotiations are currently taking place, with the House set to vote on a stopgap spending bill to keep the government open until March 23rd and provide full-year funding for the Defense Department. The Chicago-based owner of the Los Angeles Times is expected to soon announce it is selling the newspaper. That's according to the Washington Post, citing people familiar with the company's plans. The Post names the buyer as Patrick Soon-Shiong, an L.A. area physician and major shareholder of the paper's parent company, Tronc, Inc. Officials in Taiwan say at least 2 people are dead and more than 200 are injured after a magnitude 6.4 earthquake struck near the island's east coast. At least 7 buildings are reported to have collapsed or tilted. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. Just after 5:30 p.m. here in Washington, 6:30 Wednesday morning in Hong Kong. We are joined by Bloomberg's David Ingles with a look at the markets. David, it'll be really interesting to see if the Asian markets follow suit once again with Wall Street and you get a little bit of a bounce back today.
Oh, it looks like we're going to get just that. I mean, just a few things I do want to note, though. The first market that is open, of course, in this region is New Zealand, which was shut yesterday. So when you look at that market specifically, don't look at that as, I guess, a gauge of what we're in for here in the Asia-Pacific this midweek session, because we're down 1.4%. That's doing a little bit of catch-up. You look at futures on Japan, you look at futures on Australia, which open up in about 25 minutes from now or so. We are going to get a bounce on those markets. Whether or not it's a sustained bounce is for another conversation altogether. I mean, this could be a break within the sell-off itself. You know, I was speaking with Morgan Stanley yesterday, and for a market like Hong Kong, for example, they do expect more pain ahead just because of some of these extreme valuations we're seeing across some pockets of the market. Just very quickly before I go, finally, at some point, we can focus on earnings and data, and we have several bits and pieces of data to get through today, and hopefully nudge us higher across the Asia-Pacific. I'm David Ingles here in Hong Kong. More from Bloomberg Technology next.
Technology. I'm Emily Chang in New York. Let's return to our top story. Snap spiking in after-hours trading, soaring as much as 30% after smashing estimates in the fourth quarter. This was the company's first earnings victory since it went public almost a year ago, thanks to strength in advertising. Jay Jacobs, Director of Research and Vice President at Global X Funds, is here now. Global X's social media ETF has a stake in Snap totaling about 5% of the fund. Thanks, Jay, so much for joining us. Are you surprised?
I don't think I'm so surprised as just kind of excited for Snap that they were able to meet expectations of the market and finally start to exceed it.
You thought they had it in them?
I think they had it in them. They're an innovative company. I mean, you have to think of the social media industry is increasingly mature. It's really dominated by just a few players in the U.S. and around the world. And to crack into that and to get into advertisers' budgets, you have to be innovative and you have to do things differently. That means risk, and that means not everyone's going to love that. But if you can successfully kind of execute on that, people are going to start, spending money in advertising and using your platform.
That said, Facebook and Instagram, the giants in the room, are copying them and sometimes doing it better. And they obviously have many more users.
That's obviously going to be a challenge for Snap going forward. And if you think about it from the advertiser's perspective, if you're a marketer for a company, which one are you going to choose? If you have a certain amount of time in your day to create content, to spend money on advertising, you're probably going to go with a place that's bigger, has more platforms all wrapped into one, and is kind of an easier hurdle.
Of course.
So it is a challenge for Snap going forward, but they are going to continue to innovate, and I think if they can keep bringing that attitude going forward and keep challenging Facebook, I think they have a chance.
So what's your hunch on whether they can keep it up? Because really, it's not just about one quarter; it's about several quarters, and this is the first time we've actually seen a strong quarter.
Well, what they've been able to effectively do is really capture that younger market, the under 24s that are using Snapchat, and that's a very powerful market going forward. The social media industry is really increasingly being driven by these mega trends, and one of them is the rising spending power of millennials. They're going to have 8 times the income that they had in 2016 and 2025.
These days.
We've yes, of course. This is a thing that everyone is trying to get a hold of. Snapchat's one of the rare companies that really kind of has a grip on this cohort in a way that many other industries are struggling to figure out.
One of the more promising parts about Snap and its technology is the potential to integrate artificial intelligence and augmented reality. What are you expecting there?
So this is going to be a challenge for the entire social media industry, and I think what it's really going to favor is the people who have the most data. And if you look across the industry, there's huge players that have been aggregating data for years from more users.
Not Snap.
And so, not Snap. And so when you're thinking about artificial intelligence, you're only as good as the software you're programming and the data that you're applying it to. And so if you don't have the resources and you don't have the data set, that's going to be more challenging going forward as well. But if you look at the social media industry as a whole, this might be the industry that is most well suited to benefit from the rise of artificial intelligence because they have all that data.
Talent is also really critical in this industry, and Snap doesn't have the best track record with keeping its executives. Evan Spiegel, the CEO, has talked about how he understands that more people want to hear from him, including people inside the company. They want to hear what he has to say and what his vision is. How confident are you in the leadership of the company?
So it's a challenge, right? I mean, he's a founder CEO, and I think there's a lot of things that can be a benefit of that. You have the benefit of being a visionary. You can be looking very long term. Sometimes the market doesn't always appreciate that. They want to hit quarterly marks. So can he balance his long-term vision with people who can execute in the day-to-day? That's really going to be the challenge there.
What do you make of the Tencent relationship with Snapchat and how Snap might benefit from that, where maybe Facebook, doesn't have such a strong relationship with a big Chinese player?
Well, Tencent is enormous. I believe it's actually one of the biggest holdings in our fund, if not the biggest. And the reason for that is if you look internationally at kind of global social media companies, they tend to be more monopolistic. If you look at Russia, you look at China, you look at Japan, there's really kind of individual social media companies that completely dominate that market and are kind of a Facebook on steroids, if you will. And that's a very powerful position to be in. If you can partner with a company like that, you're getting, you can get access to data, you can get access to a huge consumer base. That can be very powerful.
Twitter also reporting later this week. I know you guys have a big stake. Anthony Noto, the CFO, recently left. How optimistic are you about Twitter? I mean, the numbers have been looking better, but again, we're talking about an industry that it is very saturated.
It is, I think people are going to be looking for engagement rates. How much are people using the platform? Obviously, what's happening around the world right now is bringing a lot of people to Twitter that probably weren't previously using it. But it's kind of in a different place as being kind of a second or third player in this market. There's questions about Twitter that aren't really applying to other companies, things like cost controls, things like profit margins, and that's going to be a bigger challenge for Twitter going forward. It's not just, people have almost kind of given up on user growth for them, so it's going to be other more traditional metrics that people are focusing on.
There's been a lot of chatter about a potential deal for Twitter. Of course, this has gone on for years, but more recently it's sort of picked up. Possibility of Salesforce, possibility of private equity. What are you hearing?
I don't have any unique information in that space. Like you said, people have been talking about it for years. I don't know. You can try to bet on it or not, but it's, I would say maybe 2 years ago, people thought it was a done deal, back with Google. So who knows? We'll wait until we see the news.
All right. Jay Jacobs, Global X Funds Director of Research, thank you so much for stopping by. A story we are watching, SEC Chair Jay Clayton says the commission is still looking into whether increased regulation of cryptocurrency trading platforms is necessary. Clayton, who testified at a Senate Banking Committee hearing earlier, says there's a level of naivete in some investors in the virtual currencies space.
I think our Main Street investors look at these virtual currency trading platforms and assume that they are regulated in the same way that a stock exchange is regulated. And as I said, it's far from that. And I think we should address that issue.
Coming up, Travis Kalanick testifying in day 2 of Uber versus Waymo. Just what went down when he took the stand? Juicy details. That's to come next. This is Bloomberg. It is day 2 of the Uber versus Waymo trial, and controversial Uber founder and former CEO Travis Kalanick took the stand. Kalanick is the most anticipated witness at this trial, which is set to last 3 weeks, and Waymo went after him over the technology at the center of this case, LiDAR, the light radar technology that engineer Anthony Lewandowski focused on at Google. Bloomberg Tech's Eric Newcomer was at the courthouse. He joins us now from San Francisco. So, Eric, I'm sure it was quite a show. What did Travis have to say?
It was interesting. There were, jam sessions with Anthony Lewandowski and sort of conversations about what they were talking about before Uber hired this self-driving trucking company, Auto, which then brought down, the house of Alphabet on them. So it was sort of what they were talking about. A key part of that was, there were some notes that they were looking for IP, intellectual property. So that's something that was very important. And then this general idea that, Uber was hungry for laser technology, LiDAR, to catch up with Alphabet. That just permeated all the testimony we've seen. So Google is definitely trying to drive home that idea that Uber knew it was behind, 7 years behind starting, and was desperate to catch up when it comes to laser technology.
Did it seem at any point that Travis had been cornered or caught unawares in the testimony?
No, I think Travis is now pretty old hat at being deposed. This was, more public, but he, is sort of mostly short one-word answers. And honestly, there were moments of, the fun Travis. Somebody asked, one of Waymo's attorneys asked him what a jazz session was. And, Travis went on talking about how, when you have a jazz ensemble going and sort of describing that. So if anything, he was sort of fun and light. It was only the beginning. And then a couple times, Waymo's attorneys had to sort of, impeach him and take it to the deposition, and drew some slight contrast between what he said on the stand and what he'd said before, but nothing, I think, that made him look too bad.
Let's talk about what happened leading up to this point. Bill Gurley, a partner at Benchmark who was on the Uber board at the time, told Waymo's lawyers in August that Travis's failure to tell the board critical information about the acquisition crossed a line of violating fraud and fiduciary duty, and that had he been more truthful, perhaps the acquisition of Otto wouldn't have been approved. Tell us more about that.
Right. I mean, Bill Gurley's basically said, we didn't see this Stroh's report, which was the cyber forensic report that Uber commissioned to sort of learn all the dirty laundry about Otto before they acquired it. So Gurley is basically saying, if we'd been fully informed about what that report had found, that Anthony Lewandowski had obtained a bunch of files from his former employer, the board might not have approved it. And Gurley went so far as to say, that he wouldn't have approved it, and uses the word fraud, which isn't totally shocking to learn, because Gurley's firm, Benchmark, of course, then sued Kalanick for fraud in court. So this was a key moment where sort of a board member felt that Kalanick didn't fully inform them of the risks of the deal.
And how many days are we expecting Kalanick to testify?
Oh, I think it'll just be tomorrow. Judge Alsup runs a tight ship, so he was telling Travis to make sure to be in there at 7:30 a.m. tomorrow, and he'll be sort of the first witness back up, and then he'll be done.
All right, our valiant Uber reporter, Eric Newcomer, thank you so much for giving us the play-by-play. Well, the reviews are in for Apple's HomePod, and the verdict is mixed. The smart speaker is earning praise for its audio quality, but being panned for its integration with Siri, among the gripes being unable to call an Uber or Lyft, unlike the competition. Reviewers also complain that phone calls must be initiated from your iPhone, and that the quality of Siri interaction on the speaker is subpar. Apple plans 2 software updates to the speakers this year, including linking them across your home. Coming up, a look at Silicon Valley entrepreneurship from a female founder's perspective who has been at the helm since the dot-com era. This is Bloomberg. Julie Wainwright has been an e-commerce pioneer as CEO of Real.com in 1997 and Pets.com in 1999. And most recently, she is the woman behind the luxury resale marketplace, The RealReal, which has raised more than $170 million, which means she's seen it all in Silicon Valley. She has been recognized as a top female entrepreneur by the San Francisco Business Times and has seen Silicon Valley evolve into what it is today. Joining us now from San Francisco, Julie Wainwright, CEO of The RealReal. Julie, great to have you here on the show. I am so curious, as somebody who has seen so much in Silicon Valley, how much do you think has changed when it comes to the representation and treatment of women in technology, and what hasn't changed?
Well, you know, I actually started in tech after I left Clorox in 1983, so a long time ago. And at that time, it really felt like a meritocracy. There was certainly other things going on that were a little head-scratching, but it really felt like, because it was such a nascent industry, we were all pulling together, and you actually progressed based on your work. Certainly, it has changed quite a bit, and some things haven't changed. I would say, if you look at the latest funding report, women are still sort of stuck at 3% of total venture capital goes to females. It's been stuck there for over a decade, and it really never has gotten any higher. That's the bad news. The good news is, due to Emily Fowler and other activities, there is a light being shined on the bro culture. And I think while I don't expect that much to change, at least bringing that culture forward, which has gotten progressively worse after the .com, I think is a very positive thing for men and women.
One of the things I examine in my book, Brotopia, about the evolution of women in tech is the idea of meritocracy. And people often refer to Silicon Valley as a meritocracy and believe it's a meritocracy, but often it can sort of ignore the privilege at play for the winners and the larger systemic factors working against everyone else. Do you think Silicon Valley is a meritocracy?
I think it has a chance to be. I think certain companies are. It's pretty hard to make a generalization. If you look at the funding, I would say clearly not, because women aren't getting even a little bit. We're not making any headway. But I think there are certainly companies that have best practices that reward people on what they do, not what gender they are or the color of their skin. And I think when you're in a fast-growing industry like tech, where innovation and creative thinking counts, then in fact people do have an ability to rise up faster than in something that is a slower growth company that may be basing promotions and advancement opportunities on other things.
So when you're looking for talent, as somebody who probably has greater insight into the challenges that women face, how are you hiring? What are you doing to hire and promote women and defy the dismal average of most tech companies?
All right, so now we have about 1,200 employees, so we're getting pretty big. 70% of my workforce is female, so I think we're sort of on that. Where we still fall down is my engineering team has very few women, although we're adding more. And part of that is because we don't get a lot of women applicants. So I would say we don't look at gender when we're hiring, but by default, we are hiring more women. We are mostly in, fashion and luxury resale, so I think it does attract a certain type. But to be honest, we try to hire the best candidate. And if you walk through our office, we have women, we have men, we have a great diverse employee population.
So we've been really focused on sexism lately, especially with the Me Too movement. I think racism in Silicon Valley deserves an entire book on its own. Something else that you've touched on is ageism. And in Silicon Valley, we sort of imagine all of these young college kids on these fancy campuses, which are actually company headquarters. How big a problem do you think ageism is in technology?
Oh, it's huge. And again, you know what? Look, if you're a woman and you're a woman over 50, actually probably a woman over 40, you're going to have a hard time getting capital unless you're in biotech. But I am not an advocate of looking at all the obstacles. I think it's great when reporters, especially your book, I ordered your book today, by the way. I don't want to plug it, but I did order it.
Thank you.
Because the excerpts have been interesting. But look, here's the story. It's harder for a woman over 40. It's certainly harder if I was a black woman over 40 to start a business, raise money, and especially when you're getting started and you're pitching to 28-year-old guys. And if it's a female-focused business where the consumer's a female, they really can't relate. And then they look at you and you're like, oh my God, I know, like, you're older than my mom. So look, it's hard, but that doesn't mean it can't be done. And certainly it gets easier once you get past the seed or the concept stage and you actually have real business results, then the playing field equals out a little bit. But I would say it's clearly harder for women. It's harder for older women. It's harder for older men. I mean, you don't really see a lot of men over 50 pitching businesses in the VC's office.
You have transformed the luxury consignment business at The Real Real. You know what it takes to keep a business functioning over years. What is going to make The Real Real stand out with so many new e-commerce and fashion companies trying to revolutionize the way we buy things?
You know what, we are actually changing the way people think about consignment, and we really are a change factor. We've transformed the ease of consignment. We removed a lot of the friction. We'll come to your house, you can send it in, you can meet with a gemologist, you can FaceTime with someone. So we've taken away a lot of the barriers for actually even doing consignment. And then because we take possession and we authenticate and we make sure the quality is good, we've also taken away a lot of the barriers for buying consignment. So our buyers, 50% of them had never bought consignment before. And our consigners, 50% had never consigned before. So we're really expanding the market. And, you know, in many ways, we actually aren't that different than other people that have changed the paradigm. Like, you know, Airbnb changed the paradigm. They've got more hotel rooms than all hotel rooms together. They expanded the market, and we're expanding the market. I just want one last thing. We did a relationship with Stella McCartney that's just getting started for her goods. And this is going to be a normal thing. You buy luxury goods, and then because they're high quality, you then consign it. And it's really good for the planet. So I think even having the first big luxury designer as a partner is going to actually help pave that way. We're pretty excited.
Julie Wainwright, CEO of The Real Real, thank you so much for sharing your experiences with us. We'll be watching The Real Real going forward. Thank you. That does it for this edition of Bloomberg Technology. A reminder, tune in all this week as we continue to explore the themes I write about in my new book, Brotopia, Breaking Up the Boys Club of Silicon Valley, in stores today. On Wednesday's show, we will also be hearing from Facebook COO Sheryl Sandberg.